Welcome to Real Estate Coaching Radio, starring award-winning real estate coaches and #1 international best-selling authors, Tim and Julie Harris. Real Estate Coaching Radio is the nation's #1 daily radio show for realtors who demand authentic, real-time coaching. Get ready for fluff-free, unfiltered, full-strength honesty about what's truly working to get you into action, helping others, and making money now in today's real estate market. Now to our hosts, Tim and Julie Harris.
We're back, and we're going to be talking today, as promised, about 1031 tax exchanges. This is something that all of you residential realtors and otherwise need to know, because this is going to be something you're going to get questions about. Take notes as Julie goes through the points today. What's really critical is that you understand how 1031s happen, because when you understand how a 1031 tax exchange works, you'll actually be able to create real estate transactions that you otherwise wouldn't have been able to. You will be able to talk with sellers who have properties to sell and create another real estate transaction, whereas before maybe that seller just would have kept the property because they didn't want to have to pay the taxes or any of the other things that come with selling properties. So, you know, if you're an out-of-state investor and you have a property in California and you sell that property, not only are you going to have to pay the real estate commissions and all the closing costs, but you're also going to have to pay a 3% fee to California, just because all this other Mickey Mouse you can avoid if you do a 1031 tax exchange. So get ready to take lots of notes today. Julie's I'm looking at her notes for today, and she's got, it's not too bad. And she's made it very, I think, you're not going to put all, we're not going to talk about. Okay, digestible. Okay, good. And then we're going to post the notes on our main website, timandjulieharris.com. And of course, Premier Coaching members get a very comprehensive drill down on the Premier Coaching website that goes far beyond just this. By the way, if you are not in Premier Coaching, I would strongly encourage you to consider it. Perfect time of year for you to take charge of your real estate practice for 2018. It's very simple. We've made it absolutely painless for you. Just go to freecoachingcallsforagents.com, freecoachingcallsforagents.com. Just by going there, not only are you going to be entitled to a free coaching call with one of our new member coaches, but you're also going to receive, I think it's now 5 books, Think and Grow Rich for real estate. You're going to also get a real estate treasure map, your 12-month lead generation plan, and these books are given to you right away. They're digital downloads. You get them the second you register in an email. So definitely grab those right away. Some of you are just now coming back into the real estate business. Some of you are just now thinking about getting a real estate license. I know a minority of you listening are thinking about getting into real estate, and others of you are just coming back into real estate after having taken a long winter hiatus. And I get it. Welcome back. Time to get to work. And those of you who've been our TFW members, and you guys know who I'm talking to, I'm from the emails I'm reading and the things I'm reading on Facebook, I'm already seeing that some of you are going to have absolutely your best years ever. For the rest of you who are sputtering to get started, I strongly encourage you to request a free coaching call at freecoachingcallsforagents.com. Speaking of Facebook, Julie, I believe you have lots of folks you'd like to thank and recognize, and words of encouragement that will hopefully motivate other people listening.
Yeah. They always do a great job taking care of each other. I think I've seen 3 or 4 referrals exchange hands this morning on private Facebook page for our Premier Coaching members. So nice job taking care of each other's inbound and outbound referrals. And from James Jock, he writes, furious lead follow-up story. Called a lead this morning very shortly after receiving it. They may have a realtor but don't know their name because it's a friend of a relative. Emailed my contact information after chatting on the phone, told them if they don't hear back from the agent, please remember how quickly I called them back and my willingness to work with you. On to the next one. So great mindset and attitude, furiously fast lead follow-up from James Jock. He figures urgency matters, and he's right. That is straight out of our 18 relentless lead follow-up rules that we coach in the Premier Coaching class, and he's following those. Nicely done there. Excuse me. There is also a shout out for a mastermind group that's being put together amongst those students. And I love this quick post from Mark Mayer in Hilton Head Island, South Carolina. He posts simply, your goals don't care how you feel. That's very much in alignment of doing what you don't want to do when you don't want to do it at the highest level. That is for sure. All right, let's see, kind of going through. There's a discussion about how long it took to do your first BPO for our BPO cash flow members, and lots of funny comments on that, taking a full day and a lot of tears, but it gets a lot faster and more efficient as you get those going. Let's see, Zoraya de la Batista, who lives in LA, has posted her accountability worksheet which is full of dollar productive activity, listing appointments, listings taken, listings sold, buyer interviews, buyer broker agreements, buyer sold leads generated. In other words, the things that actually bring her closer to a paycheck. So I love that she posted this for added accountability. That's a great example of how to play the real estate success game. So that's it from the Facebook crowd. And let's go over to thanking some of our Amazon book reviewers. Excuse me again. So again, on Amazon.com, you can find our book, Harris Rules, best-selling book. You can either download it, you can get a hard copy, or you can listen to the Audible version now. Super easy to do. And someone who calls themselves Angelis posted, Tim and Julie are the best in the industry, and this book is just what I needed. I also signed up for their coaching, and I'm very happy about it. So thank you for that post. From Joe Sue, he writes, if you're looking for a concise guide on how to win the real estate game as an agent, start here. Thanks, Tim and Julie. And from Lance, useful and relevant information that you can apply to your real estate business today. No fluff or BS. Highly recommend. And I could go on, but we'd just like to thank you guys as you post. Thank you to all of you who have contributed to making this a best-selling international book, Harris Rules. Again, easy to get, Amazon.com if you don't have it already. Back to you, Tim.
Well, so Julie, Harris Rules updated version, believe it or not, it's going to be available in a year. Julie and I are working with a new publisher, and they wanted us to do an updated version, so we're going to do just that. And yeah, so that's going to be coming out probably the beginning of next year. And it's the event.
Updated in the sense of enhanced, not that the one that they all have now needs, updating. We want you to use everything that's in there. We're just adding some chapters and some appendices and, some real world stories and adding some spice to it, I would say.
Yeah, we're adding more content basically. Event. The event page, honestly, all of you mostly have expressed interest in attending our private mastermind event that we're going to be doing in Austin at the end of July. We will have the event page. I'm hoping to have that live today. Elite coaching members will have access to it first, then VIP coaching members, and then Premier coaching members. So there it is. When that goes live, please do grab your tickets immediately. Our masterminds, we keep them small. These are not your typical real estate events where, in essence, it's a, free-for-all where you're just there to basically be sold a bunch of stuff. This is a true mastermind, an opportunity for you to meet some of the top producing agents in the country that you heard of on our podcast. These are agents usually making millions of dollars per year, selling sometimes hundreds. We have a couple that sell over 1,000 houses per year. A lot of them are going to be at this event. So you're going to be able to literally rub shoulders with some of the nation's top agents. And we will be doing more of these small mastermind events. We're going to avoid doing big events, just because we like to go to events personally where we get to meet everyone. And I know from having been in your shoes before, you like to go to events where you have the opportunity also to have high impact learning, and that's what this is all about. So Julie, let's pick up where we left off over the past few shows. And I know you guys are loving these investor shows. We're getting a lot of positive comments, and I see the listenership actually increasing as a result of Julie and I talking about investing. So Julie's going to go through what might seem like boring stuff. And Julie, let's not try to dramatize this, or let's not worry that it's boring. Let's just give them the information because they need the information.
It's very factual. Yeah,
that's what I'm saying. But don't feel, guys, sometimes when Julie and I are going through some of the content, especially stuff like this, we feel obligated to make it more entertaining, right? And so, Julie, what I'm suggesting is let's not bother doing that. Let's just basically give these guys the information so they can then use it immediately. Because I remember when you and I first started learning about 1031s, back when we sold real estate, it's like, holy crap. I mean, you're getting a call from somebody who says, I'm selling this property. It was a rental property that I bought a long time ago, and I just don't know what I'm going to do with it, or they don't have a particular plan. And then you say to them, well, why don't you realize the taxes you're going to have to pay, or maybe the recapture on the depreciation and all the other stuff. And they're like, I didn't know any of that. Then they talk to their accountant, and then they're freaking out. Then they're realizing all the money that they're going to lose to taxes as a result of this transaction. And then you say, well, have you considered a 1031? Then all of a sudden, what would have been one listing now becomes two deals because you can sell them into something else. So that's really what's exciting about 1031s. And 1031s, too, have a lot of potential for all of you who have started investing maybe long ago, and you're having maybe a bunch of single families, and maybe you're at a point in your life where you want to put those into a big multifamily. Well, 1031 them, you don't have to pay any of it. Your property could have gone from worth $10,000 to $1 million, and you 1031, no taxes paid, kids. So make sure you are paying attention and taking great notes today. And Julie, let's not worry about flyering it up. Let's just basically give them the content so they can write this down so they can immediately put it to work.
Yes, you got it. And in fact, it's actually pretty easy to present if we simply stick to the rules, because they do have a lot of rules that go with this. And I think this is critical that they understand. You know, so many things that are in the investment world and in the commercial world, I almost think they've been like coded to either confuse or get the residential agents out of their hair, because everything's either an acronym or a number, right? So we're going to demystify some of this. The 1031 concept itself is very simple. It says reinvest the proceeds from the sale of a business or an investment property into a like-kind investment in order to defer paying capital gains tax. What you just said, Tim, to defer paying the tax. Now, excuse me, how does a 1031 exchange work? Let's say, for example, you buy a property for $200,000 that is now worth $500,000 by the time you wish to sell it. Rather than paying capital gains on the $300,000 gain or the appreciation, a 1031 exchange would allow you to invest the proceeds from the sale into another piece of real estate. So far, it's pretty simple, but there's a lot of rules to this. Now, why is it called a 1031 exchange? Because it is literally an internal revenue code called 1031. There are some specific guidelines to governing the process, and here's your brief overview. So here are the rules to play by. The most common 1031 is called a deferred or delayed 1031 exchange. That's what we're going to talk about today, and I'm going to give them some references of other types of 1031s in case they come across that. But the one that we most commonly deal with is the deferred or delayed 1031 exchange. All right, so in this case, the investor closes on the relinquished property. That's the one they just sold. Then within 45 days, this is called the identification period, closing. They identify a replacement property. In order for a replacement property to be considered valid, one of three criteria must be true. Here's where it becomes a word problem, right? Of course, it's a tax code, so it can't be that simple, right? So one of these three things must be true. First thing, the three property rule. An investor identifies up to 3 different properties as potential purchases within the 45-day identification period, regardless of the total fair market value of the properties. Okay, so this is identifying up to, doesn't have to be 3, but up to 3 different properties as potential purchases. Now, that's one rule. Here's the next rule. It's called the 200% rule. An investor may identify an unlimited number of replacement properties as long as the total fair market value of all properties, which I think for our purposes we would say the listing price in most cases, because you got to use something. You could default to the appraised value, but that would require you to be in contract. So we're going to use probably the list price. The investor may identify an unlimited number of replacement properties as long as the total of all properties does not exceed 200% of the value of the relinquished property. That's something I didn't know about 1031 exchanges, that you could do it that way as well. Now, remember, this is one of these 3 rules. Here's rule number 3, 95% rule. An investor may identify as many exchange properties as they want, as long as they receive at least 95% of the value of all identified replacement properties before the end of the exchange period. Now, if that wasn't complicated enough, we'll be posting this, and I'll certainly make sure we have great detail in our premier coaching class on this as well. In addition to the 45-day identification period, an investor only has 180 days from when they close on the relinquished property, that's the one you're selling, to close on the replacement property. This is called the exchange period. Remember, up till now we were in the identification period, now we're in the exchange period. These 2 dates are critical for investors to remember. This is one of the places you as agents can provide value, is understanding this and coaching your investor clients, in which case sometimes it's yourself, to the property dates. Okay, so remember, we've got 180 days from when you close on what you sold to close on the new property or properties. Now, in fact, you can expand that a little bit, because let's say you go in contract on what you're selling today and you've got 45 days before you close. Well, you can certainly be in the identification process, in the bidding process, before that 180-day clock starts ticking at the date of closing. Now, on the other end, you have to keep in mind, you can't close on the new property after 180 days. You have to close within that 180 days. So on the 181st day, you're out. So you got to keep track of this stuff. Now, this is important, this type of 1031 exchange does require investors to use what's called a qualified intermediary. It's sometimes referred to as an accommodator, okay, or a QI, that stands for qualified intermediary. It's an uninvolved third party who holds the investor's sales proceeds from the sale of their relinquished property in an escrow account until they close on the replacement property. If an investor were to touch the sales proceeds before closing on the replacement property, they would be in violation of Section 1031. So you have to be committed that you're going to do the 1031 because you can't get at the funds and then still do it. And then you could be held liable for the taxes if you tap into that once it's been put with the accommodator. Okay, so you're in or you're out. There's no parking the proceeds with the accommodator and then getting pieces and bits of that money out and doing other things with it. You would be in violation of the 1031. Now you can always opt just to pay the taxes. That's an option. But if you're going to do the 1031, you got to play by the rules. So far, so good, Tim?
Yeah, perfect.
Problem.
Makes sense.
Okay. Now, so the next logical question would be, what does one of these qualified intermediaries cost, or the accommodator charge? And my research has shown generally it's between $750 and $1,000 for the pleasure of holding your money in escrow and facilitating. I'm sure that probably varies from market to market, and the title and escrow people have accommodators that they recommend as well. So next we have a simultaneous 1031 exchange. The investor closes on the relinquished property, then closes on the replacement property immediately thereafter, usually within a day. An investor may use a qualified intermediary to handle the funds. However, in this case, they are not required to. So doing the simultaneous exchange, again, requires that you close. It says usually within a day. I'd have to get into the 1031 tax thing to read that, or get an accountant to tell me if you've got 2 or 3 days. But let's just say simultaneous is simultaneous. You sell it, then you buy it, okay? That does not require that the money be held by the intermediary. The title or escrow company can handle that type of thing. So one way to not have to do the accommodation then is to get the property that you're selling in contract, maybe make it a little bit longer closing date, 60 or 90 days, and then turn it into a simultaneous exchange after you've identified, gone into contract, negotiated, done the inspections, appraisal, everything else, and set your closing dates up to be back-to-back, or even on the same day. That's, it depends on what end of the hassle you want to deal with, right? So you do the 1031, you buy yourself some time, but it's going to cost you some money. You don't do the 1031 and you do the simultaneous close, you just have to be on top of it. And, sometimes you identify what you want to buy before you even sell something. It just depends on your own time frame. So more rules. Here we go. General rule of thumb, investors should remember the replacement property should be of equal or greater value of the net of the closing costs than the relinquished property. And all exchange equity must be reinvested for the full tax deferral. In other words, in most cases, you're going to trade up. But keep in mind, you are allowed to do that with multiple properties. It doesn't have to be all in one property. I think where residential agents get stuck on this sometimes, Tim, is that initial phrase, like kind. That doesn't mean it has to be exactly like what you just sold. It just has to be the right money combination. Does that make sense?
Yeah, and I think it's a pretty general, Julie just hit the nail on the head, but really when you're dealing with this type of tax exchange thing, here, as you guys are listening to Julie go through this, what she's trying to do is give you crib notes so you can have a articulate conversation with somebody who you might be able to help with the 1031. I don't think really there will ever be a time when you want to actually bother with trying to figure all the stuff out yourself, unless you are an accountant or an attorney. What I would do is, again, we're just giving you the crib notes so you can sound intelligent and articulate when explaining the broad strokes of a 1031. And then what we want you to do is, as Julie just said, we want you to go and identify, ask other agents, start there is what I would do. Ask your broker, your office manager, ask your title folks. Find out somebody who, or maybe 2 or 3 folks that basically specialize in doing 1031s. Don't try to find somebody with a real estate license because they're probably going to complicate things. Look for somebody who is dedicated to doing 1031s, as maybe like, an attorney or an accountant would. Get an idea, call them ahead of time, get an idea what their costs are. Ask if it's cool if you send them referrals. and then you have them in your back pocket. So you have the conversation at Starbucks, document 1031s, and the next thing you know, if someone's interested in pursuing that, then you can flip them over to one of your 1031 experts. So don't think this is something that you're going to be quizzed on later, because you won't be. So no. When you're going through this information, and you're feeling overwhelmed, we just want you to be educated enough so you can have conversations, so you can generate a lead and generate a sale. But don't think we're asking you to actually take on the laborious task of weeding through the formage. So be clear.
Yeah, and in fact, I'm pretty sure your license doesn't cover you on pretending to be an administrator for a 1031 either. That's probably in that whole don't play like an attorney type of deal somebody could pick on you about. But that said, to Tim's point, what we want you to do, and what we work very hard on this podcast and all of our coaching to do, is to set you up to say, why, yes, it would be my pleasure to help you with that, and then know where to go from there, instead of, that's not really my cup of tea, let me refer you to somebody, blah, blah, blah. So I have a little tiny list to get them going. It's kind of like a mini pre-qualification when somebody comes and says, can you help me with my 1031? We've just got some basic questions in order to get that set up. So what is the property? Remember, you can 1031 a business sale or a piece of real estate. So find out what exactly is it. Is it commercial, residential, business involved or not? So what is being relinquished? By relinquished, they mean sold. When was the property acquired? How much did you pay for it? How is it vested? How is the property used? Is there a sale pending? You know, this is not that different than when a seller calls you and you ask them, you know, what price won't you go below? Tell me more about the property and your situation, right? We just have to look at the dates a little bit more. What is the value, the equity, the mortgage? And then what are you planning on acquiring? Have you already identified that property? If the purchase is pending, who's handling the escrow? So that'll
Julie,
get you started, and then you turn it over to the facilitator. Go ahead.
You just said something really important, and I know this is a lot of, guys get stuck on this. The person can have a mortgage. This does not have to be a paid off property to do a 1031. They're just 1031ing their equity. So they might be, looking, it just depends on the math, obviously. You guys can run scenarios in your head, but just be clear, a 1031 can work even if there is an unpaid mortgage, a first, a second, it doesn't matter. That equity that they would have, that can be 1031 to the next property. And then they don't have to pay capital gains. Then they don't have to screw around with the recapture and their taxes and all the rest of it. They just move the equity from one property to the next. Jules?
Yes, which is the simple way to do it. So again, we just want you to say, absolutely, I can help you, and have some good questions in your back pocket. There's a great resource called 1031exchange.com if you want to get any deeper into this. I think hopefully we have given you enough to make you effective. I was going to say dangerous, but we don't want to coach them to be dangerous. So make them effective and say, yes, we can help you. So remember, in recap, you have to stick to one of the three rules. You got the 3 property rule, the 200% rule, the 95% rule. You can indeed invest in multiple properties to replace what you sold. You have to pay attention to the dates and make sure you're spending all of the equity that you got out of the one you sold. And then you've got to know how to identify a facilitator. There's a lot of people that advertise online that they're 1031 facilitators, but I think going to your title escrow or broker is probably a good way to get somebody that's already been vetted, and that'll usually cost $750 to $1,000 bucks. So that should do it. And tomorrow, Tim, we're going to talk about how depreciation works. We'll have a little discussion about that. We always talk about the appreciation of real estate, but we're going to get into the effects of depreciation, recapture, all of that sort of quasi-accountant type of thing without getting in the weeds. Make sense?
Yep. And Julie, websites, I think you mentioned this. It's 1031.org is the National Association of Facilitators. That's a good place to get started. And also 1031exchange.com. Heck, some of you listening might even want to get in on being a facilitator. Who knows? So anyway, there it is, guys. There's your 1031 information in less than 30 minutes. So use this information in good health. This will also be posted on timandjulieharris.com. The title of today's show, if you guys are going to go search it on on iTunes, is 1031 Tax Exchange, 5 Things You Must Know. So tomorrow we're going to be deep diving into, as Julie said, the depreciation. Depreciation is another one of those accounting terms, but it's something else that you will want to understand for your own sake and for the sake of basically getting your folks down the road. Julie did touch on this, and it's really important. As a real estate practitioner, please do not play accountant, do not play attorney, do not play, anything else other than the role you are of a salesperson. You can have a overview, a cursory understanding of information, maybe a printed out, something you give to folks that are interested in this sort of thing. But the best thing for you to do is get them interested, give them the cursory information, and then hand off that relationship. Your job is to buy and sell real estate. Do not make the mistake of thinking you're a home inspector, thinking you're an appraiser, thinking you're an accountant or an attorney. This is how agents always get in trouble when they, branch outside of the realm of their true expertise. So if you guys need us for anything, it's tim@timandjulieharris.com or julie@timandjulieharris.com. And remember, guys, if you've not yet requested your free coaching call, go to freecoachingcallsforagents.com. Have a fantastic day. We'll talk to you on the show tomorrow.
This program has been a presentation by Tim and Julie Harris, Real Estate Coaching. For more information on our real estate coaching and training programs, visit our website at timandjulieharris.com. Remember to tune in weekdays at noon for upcoming shows. And until next time, thank you for listening to Real Estate Coaching Radio with Tim and Julie Harris.